we felt it would give us the best access to the strongest possible group of senior insurance decision makers.
Insurtech Insights is a must-do conference, I think, for the network that is built here.
Thank you very much. Welcome, everyone. Welcome to this panel about redefining the future of motor insurance and reshaping distribution and trust. My name is Scott McGee. I'm news editor of Insurance Post over here in the UK. And before we get started, I'd like to introduce all of our panelists and give them a chance to introduce themselves. So we'll start with Guillaume on the end.
Sure. So I'm Guillaume. I'm the head of Automotive and Mobility Partnerships at Qover. Qover being an insurtech, orchestrating B2B and B2B2C insurance program across Europe and across different lines of business, including automotive and mobility, where we basically collaborate with car manufacturers on their motor affinity programs across Europe.
Thank you. Pierre, in the middle.
Thank you. So very excited to be here. So very quick introduction on my side. So I've mainly a background in large tech companies, but been joining Generali, that was initially one of my clients 5 years ago, and I've been in charge of business development globally on the motor line of business, so affinity and large fleet programs, the book of half a billion of premium. So we're not the largest player, we're still a very big player on life, but with a growing presence on affinity business.
Thank you very much. And finally, Phil.
Hello, everyone. Phil Norris. I work for part of the MS&AD group, large Japanese insurer, across shareholding with Toyota since the 50s. We, in Europe, work as INSADAUER Europe, or Andy. And then we have a shared broker agent called Toyota Insurance Services. I've worked for the Toyota company nearly 30 years. I guess my claim to fame would be no job existed before I did it. And this one is the same. So my focus is new products and new technologies.
Thank you very much. Right, so we'll get started with the questions. Phil, I'll come to you first. So, especially over here in the UK, we've seen quite a large increase of original equipment manufacturers becoming part of the distribution chain through affinity programs. You know, there was one example today. There's news out about Volvo and Allianz partners extending a contract. Why do you think we've seen that increase from OEMs, and what motivations are there behind that?
So I'll start with the word affinity, which means sort of the natural liking for each other. And insurers and OEMs wouldn't naturally like each other because our definition of good is different. Insurers like people who don't crash, who don't get their car stolen. Car companies quite like that because it means it drives their business. So it can never be a short-term commercial agreement. It needs to be a much longer-term strategic approach. We've been doing this a long time. 1999 is where we started in Europe. The obvious reason why a car company wants an insurance company, it drives repairs back to their network, which drives parts, drives labor, supports the whole network. But there are actually much more fundamental reasons to do it, one of which would be around the feedback loop. So we know a lot about the vehicles because we look after them when they go wrong or when they have a crash, and that is a really important point of data that can go back to the car company. We actually crashed the cars for Toyota in Japan, and feedback not on the design but on the repairability of that vehicle, because that links back to the cost of the repair, the ownership cost, which then obviously comes back to the whole success of the vehicle. There is also another level of data, which is around the customer. Perhaps we'll talk about connected later, but this has always been true. The insurer knows more about the customer than the OEM, the finance company, because we talk to them every year. If you don't do this, your customer could move, they could have a crash, they could sell their car. Often that information isn't known, and that can be fed back with the appropriate consents. And it adds a lot of value to the whole franchise.
But do you feel that manufacturers are becoming more akin to the feelings of customers, and is there an increased appetite from customers to maybe buy their insurance from the company that they actually buy the car from?
So from the customer side, the obvious reason to do it is trust. You've trusted a brand to buy the brand. And certainly it's what we would stress, that we're the only ones that can promise to put the car back how it was. But there is the convenient side of things. Picking up the OEM side, I think there's a greater awareness that selling a car is only the start. There are tens and maybe hundreds of micro opportunities to engage with that customer during the ownership. And as soon as you switch to usership, the insurance has got to be part of the conversation.
Okay. Pierre, I'll come to you next. Given Phil's point, from the insurer perspective, how do you see the relationship between OEM and insurer changing? He said that they have very different views, and it now seems that insurance are more of an enabler, or an OEM is now more of an enabler to insure rather than maybe a disruptor. Is that your view? Are we seeing more of that?
Well, probably first to answer a bit to the previous question and the point of Phil, I think loyalty is a big point, both to channel clients back to the after-sales network of OEMs. But the way you structure products can also entail a higher, let's say, loyalty with clients. So financial captives of car makers are playing with the residual value of cars, you can also play with the insurance product. So when there's a total loss, to somehow force or heavily steer the person to stay with the same brand. So afterwards, to your point specifically, I think the market is changing. It's changing fast. Toyota is probably one of the very early adopters of verticalizing and integrated everything. So doing the whole insurance, not only the PPI and the GAP, but MTPL, MOD in a lot of European countries. Many car makers were somehow just interested before in having some grip around the steering of claims to the network and getting some commissions that in some markets are quite low, in Italy are very high, so after it's a very market-by-market thing. But every car maker is going the route of a bigger integration of the insurance for the reasons we mentioned before. So a lot of French car makers are trying actually to internalize insurance, but it's a very costly thing to do. There is afterwards the model of probably some German car makers to just own the customer journey and then to plug and to force insurance carriers within the customer journey. So Daimler is doing something similar, for instance, with Movings. And then you have all the rest of insurers, of car makers that are working traditionally with local partnerships. But the fact that you have more and more digital-only car makers, car makers selling cars digitally and EVs, I think will force the market to go within this direction, because they have the potential to scale an insurance solution in all markets from day one, because they are not bound to working with car dealers. So I think the market will change in that direction, but I think the evolution will be a bit brand by brand, and traditional car makers probably will take more time, and the journey will be longer.
And Guillaume, you sit kind of in between these two. I mean, you sat. Okay. Anyway, but so you sit between these two in like the supply chain. How do you see the market evolving, to Phil and Pierre's point, and kind of how do you adjust your offering to suit that, shall we say?
I mean, and I think it was the point of Phil. When we look at the classic and traditional motor affinity programs, I mean, these have been up and running for the last 50 years, 100 years. And basically there is always challenges when OEM rely on insurers to provide the product, the pricing, and the technology to distribute these insurance products. One of them is that, as Phil was mentioning, the OEM are focused on reducing the total cost of ownership, and so it means offering low premium to the end customers, and also steering back repairs to the OEM after-sales network. And on the other side of the fence, you have the insurer, and the insurer is obsessed with the profitability of the book and reducing the cost of claims, and it means sometimes steering vehicles back to the insurer preferred network and not to the OEM network. And when it comes to the technology for insurance distribution, when the OEM rely on the insurer most of the time struggle in delivering a technology which is suitable for the OEM because of all the legacy infrastructure and legacy tech of insurers. It usually prevents the OEM to build a digital and state-of-the-art customer journey. And what I found extremely exciting currently in the ecosystem is that OEM, as Pierre was mentioning, are starting to take over the insurance value chain, and they are trying to position themselves a bit differently on that value chain. And so there are basically two, according to me, there are two groupings of OEMs. You have the OEM which are very much focused on the product and on the pricing. And here it's basically the OEM such as Tesla in the US or Volkswagen in Germany, where they have set up a JV with Allianz. Stellantis as well is one of the examples of these OEMs setting up an entity in Malta. And they are focused on building risk carrying capacity internally. So that's one grouping of OEMs. And you have another grouping of OEMs which are more focused on the distribution part. And here there are, again, two different approaches in these OEMs. There are OEMs which are trying to build everything from scratch in-house. The case of Mobilize, Renault Mobilize, for example. But it's extremely costly and extremely long as a process. It's huge IT programs with all the pitfalls that you always face in this kind of situation. And you have another grouping of OEMs still focusing on the distribution, but which are much more keen to partner with Insurtech or tech providers. It's basically the BMW and the Volvo of this world. And here they are working with Insurtechs or tech companies, and they basically outsource all the deliveries of the technology, all the delivery of the orchestration to these third parties. And it's a way to ensure an efficient time to market and to reduce the cost. And of course, Qover being one of these Insurtech working with OEMs, I believe that there is much more value going down in that direction than trying to build everything in-house.
Going back to one of the points that you made just then, you were talking about the different outcomes and and different needs from an insurer compared to an OEM. One wants profitability, one wants to reduce premiums. How do you manage expectations dealing with both sides? How do you keep both sides happy?
It's a difficult question.
Sorry.
I think it's all about the power of orchestrating insurance programs. Mm-hmm. So you need to be able to manage insurers and manage the appetite from insurers. Because at a certain period of time, an insurer might be extremely keen on supporting a program. They might have a strong appetite for motor insurance in a certain market. They're going to be very competitive, very keen in collaborating with one OEM. And then after 3 or 4 years, there is a strategic change for that insurer, and potentially motor insurance is no longer a priority. And so the challenge at that time is that you need to be able to replace that insurer without replacing everything which was already put in place with the OEM. And if the insurer is owning the technology, when you change the insurer, you change also the entire technology behind. And so it's a long and complex IT transformation. So that's the power of orchestrating, is that you keep the technology, but you are able to plug in and out capacity based on the appetite.
Thank you. Sorry to give you the difficult question. Phil, I'll come back to you.
If I may just pick up on that, because it's something we experience a lot. Car guys are car guys, and it takes a while for them to understand the importance of insurance. And sitting in the same office, which is largely what we do across many countries, it allows for that communication to be beyond just the odd meeting, the odd communication, the commercial discussion. So that's one thing. The other thing I'd say is, we don't always insure and administer our schemes. We work with partners. It just makes more sense, particularly in 27 European countries. And because we're an insurer, we're actually a really good mediator, because we understand the insurer must make money. It cannot lose money because it, in the end, affects the capital position. And Toyota trust us because we share data with them, and we have a number of obviously good use cases they understand. So it means that we can manage long-term partnerships with insurers and get that message across, which helps on the Toyota side because there's trust, and on the insurer side because The alternative is often a finance company who are focused on commission and sales process, or a car company, and the challenges around understanding the dynamics of insurance are even greater there.
Okay. No, that's interesting. But Guillaume made a point that OEMs are, I think you said, taking over. I don't know at what scale that may be, but from in your opinion, Phil, why are they feeling that there is a need to do that? What benefits are there from being more involved in the distribution chain, or taking insurance in house? What benefits are there to come from that?
So the numbers will differ, but turnover is sales, margin is after sales, and 30% of after sales is collision, and therefore you need to control that business in order to benefit from it. Cars crash less, will crash even less. They cost a bit more to repair, and therefore owning that scheme is the only real way to channel those repairs. If we step forward some years, 27 in the UK, autonomous vehicles level 4 are deemed to be legal. That's the point when individuals are not deciding where the vehicle is repaired. The vehicle is repaired according to the service agreement linked to it. And therefore, they need to understand that in order to secure the whole value chain.
Okay. And then Pierre, from that point, if OEMs are, say, coming for your business and they're trying to take business away from you, how do you adapt to that changing market? How do you increase and grow in that market? And basically, how do you compete?
From the point of view of an insurer,
Of
right?
an insurer, yes.
Well, I think there are two things here. First one is, if car makers are going the route of integrating insurance, we will be seen more and more as speaking as an insurer, as a capacity provider. And being seen as a capacity provider, there's probably more a reinsurance play, so it's probably more interesting for a reinsurer than an insurer. Where we can bring some value here is probably on services that have a value, thinking of telematics, thinking about, all these people do not have any baseline, so they still need to begin from something, and the something we can provide that. Even if afterwards there are some antitrust, you can provide just a certain level of information. But that's what we need to do in order to avoid being commoditized. I think the other one is these people are trying most likely to digitalize their processes and to have one. It's true that a Qover, for instance, is reducing the complexity, but even a Qover wants to partner with an insurer that can cover many products, many markets, having one integration and everything. So at the end of the day, even if they have a growing role in the value chain, and they even close to a broker in some senses, they would like to reduce the level of complexity working with insurers. So the more we are able to enable them to have APIs, products that are a bit the same across markets, and covering a large geographical scope, potentially even working in freedom of services on some products, I think the best we are able to be competitive. And then it's an arms race, Now to be competitive, you need to do this. Probably tomorrow you need to do something else. But I think the competition right now is on these two things. So more services on reinsurance, and then being able to provide this one platform experience to our partners.
Okay. And then Guillaume, how do you, where do you sit there? Are you an enabler for both? And how? Because obviously, if you're selling a service, if you're selling insurance, you're selling a customer experience. So how do both insurers and OEMs compete to offer the best service to customers and therefore win business?
So yeah, the answer is yes, we are an enabler, and we are sitting in between car manufacturers and insurers, because none of them really have the technology to be able to build digital and state-of-the-art customer journey, which is really what is the most important stuff for both insurers and car manufacturers currently. Is if you are not able to address all the distribution channels and to digitalize your programs, you don't sell enough insurance policies, and so you don't generate gross premium for the insurer, you don't generate after-sales revenues for the OEM. So it's all about enabling these digital customer journeys. And I think on that part, there is no perfect standard customer journeys for OEMs because each OEM is unique. So you really need to take into consideration the uniqueness of each OEM, of their brand, of the way they sell cars, of their customer segment to build the right customer journey and the right digital customer journey to address these customers and these OEMs. But that being said, there are a couple of guiding principles when you want to build a digital customer experience with an OEM. So I think one of the first one is being able to localize customer experience and insurance program because I mean, since the beginning, we are talking about global insurance program on the scale of Europe, but the reality is that motor insurance is very much a multi-local business, and in each country you have a different regulation, you have also different customers' behaviors from one country to another. In the UK, customers are used to buy insurance online and digitally. It's not at all the case in France. In France, people want to speak with someone over the phone before signing up for a policy. In Italy, customers are used to take part of their motor insurance with their financing and their leasing. So there are local habits, and you need to take that into consideration. There are also several other aspects out of it. So you need to be able to offer an omni-channel customer experience. So of course, leveraging dealerships, which are still extremely key when it comes to distributing motor insurance, but also leveraging all the digital touch points that OEM have developed with their end customers. So app, website, car configurators, onboard unit of the car, all these different channels. Needs to be seamless as well. And here it's a key part. So it's all about data and data sharing between the OEM and the insurance provider. Because if you want to make it extremely seamless, you need to be able to leverage the data that the OEM have around customer to be able to generate a quote almost automatically without any asking underwriting questions to the customer. Needs to be as well multiple touch points and beyond the point of sale. Because if you don't manage to sell insurance at the point of sale, you want to be able to capture customers beyond that. And the last point, I think, is, and I think it's key, it's around continuous improvement. Because whenever you have a program which is up and running, an insurance program, you need to be able to access the data around that program to really understand how it performs, what works well, what doesn't work well, and to be able to take actions to improve that and to, in the end, improve the penetration rates of the customer journey.
Okay. Thank you for that. Phil, have you got anything to add to that? As you said, you sell cars and insurance in 27 different countries. So, are there any particular changes in customer habits that you or examples that you can give us?
Well, the first thing I reflect, we're not saying that the role of the insurer will change. The role of the insurer is really important because what the insurer does, the car company can't. What I'm saying is the relationship needs to be more than just commercial. It needs to be longer term, and it needs to have benefits on both sides. Your difficult question, how do you cope with that difference? It's through partnership. Insurance is how much and how often. How much will be affected by technology and some feedback to the customer. So how often will be, how much you can have a significant effect by talking to your OEM partner and looking at the prices of that. Do we see digital changing? Yes. The markets are at different stages and there are some really ingrained processes in place. The UK is difficult, not just because of the aggregator. You don't change your insurance when you buy a car. You change your car on your insurance. So the opportunity to sell at the point of sale is much more difficult there. Sweden, it's baked into the vehicle for 3 years on the casco side. So, you have to understand those changes. And as proud as we are as a company, we don't change a whole market by ourselves. We have done some interesting things. In Italy, we have a product which is aligned with our hybrid drivetrain. So we know from our telematics past, driving gently means less crashes and less serious crashes. If you drive a hybrid in hybrid, you can only drive if you drive defensively. The moment you drive aggressively, then it moves to the ICE, the internal combustion engine. So our offer is simple. Drive in hybrid, it's free insurance. Drive in ICE, it costs per kilometre. It's a lovely idea. It's certainly changed some of the thinking in that market. And we're able to sell MTPL in Italy, which is not usually sold through dealerships. So you can have some influence, and that comes from a partnership, because the data has to come from the OEM, it comes through the OEM app, but the insurer plays a very clear role. Picking up on the digital side, car companies are good at making cars, insurance companies are good at writing premium. We're neither of us particularly good at digital, and we do keep trying. I was in one meeting some years ago with a very large digital company, and their short-term thinking was longer, no, the other way around. Our short-term thinking was longer than their long-term thinking. So from that, that's the difference in the engineering mindset.
That's interesting. You mentioned like hybrid vehicles and the evolving motability topic is kind of ever present, with autonomous vehicles, electric vehicles, even usability as opposed to ownership, usership as opposed to ownership. Pierre, how is the changing landscape of motor ownership having an effect on insurers changing their risk landscape and their ability to insure?
Well, one thing is obvious. You are seeing a shift from personal lines to commercial lines. I think that this one is quite obvious. The second one is cars are getting more connected and, let's say, closer to autonomous driving, so with more ADAS and everything, you are able to segment potentially the pricing even better based on the data you are getting. But to do so requires a bit of shift in the mindset of the insurer in the first place. And somehow it's also a trade-off between how much you want to simplify the quote and bind, because if you want to have a very super embedded experience, actually, you don't ask any questions and you do one flat price. But that's not very much working in the insurance world. So to make, you need to find the right mix, and the right mix is probably getting a lot of data from the car in the first hand, and also being able to use the credit score of the financial captive of the car maker, being able to use other types of data as a proxy to still have a quote and bind fast without asking too many questions, but at the same time having a segmented tariff as well.
Okay. And then Guillaume, how do you see connected and the changing landscape affecting the market as we see it? Obviously, having an eye on both sides.
I mean, all these new technologies, so connected car, autonomous car, even if autonomous car, I mean, self-driving car is not yet a reality. I think it won't happen in the short or mid-term, but there is all the ADAS equipments that Pierre was referring to, which are extremely helpful and widely available across different models. What is interesting is that all these equipments, including ADAS, prevent accident to happen. So somehow it reduces the claims frequency. But the challenge is that this equipment rely on sensors which equip the car. And so whenever there is an accident happening, you need to either replace these sensors or to reconfigure, recalibrate this sensor. And so you increase the cost of claims. So basically all the benefits that you have from reducing the claims frequency are just offset by the fact that you are increasing the cost of claims. So in the end, it doesn't really lead to any premium reduction for the end customers, and they don't really see the benefits of these equipments from an insurance point of view, at least. But what I find extremely interesting in this kind of technologies is that it's also like a way for OEMs to be extremely well positioned to use this technology into their insurance program. Because car manufacturers are the one designing and manufacturing these technologies. So nobody else on the value chain is positioned to use it from an insurance perspective. And when you look at telematics, for example, it's a way for for car manufacturers to have regular touch points with their customers. And whenever you have an update on the driving score, you can share that with the end customer. It creates a new touch point between the OEM and the end customer. Whenever there is a crash, the OEM is becoming aware of it, and so they can ensure that vehicles are steered back to their network thanks to that information. So I believe that all these new technologies are just reinforcing the value proposition of OEM and boosting the attractiveness of their motor affinity program, and it's creating differentiation against the traditional insurance product you can get from any insurer on the market.
Okay. Probably can I react quickly on the point of Guillaume? I think what he said is true. I would just add two things. Like car makers usually want to monetize data, but at a price point and at a granularity that is unfit for insurers. So I haven't found yet a real business model with many car makers at the data points that they are willing to sell the data, first thing, and with a granularity that enables, for instance, to do a pay-as-you-drive or pay-as-you-drive. So if it's only, the odometer and having the mileage, I think everyone is able to do it. But if you want to do something a bit more sophisticated, they are not there yet. And the quality of the data you get actually from mobile phones or from aftermarket devices is higher than the data you get from the car right now. You get some data for the CAN bus of the car, which is useful for predictive maintenance, but for an insurance use case, in many instances it's missing. And then you have each car maker has a different set of data, so you probably need afterwards a layer to get the same data from everyone.
Okay, then Phil? So because we work so closely, before a car comes out, we have the opportunity to work and understand the technology and the effect that technology may have on the likelihood of a crash, which puts us in a good position. The negative of too much information is when your 90% of your book is Toyota and a car has a problem, it affects you a lot more than an open market. So sometimes, a lot of knowledge isn't great, but at least we're sat at the same table. We can feed back that data, that feedback loop I talked about. It gives us an opportunity to look to resolve that, because in the end, if it hits us first, it will hit the rest of the market afterwards.
Okay. I'm just conscious of time. We've got about 6.5 minutes left, so I'll pose one more kind of more general question to the guys. But if you've got any questions, please do let us know. We'll go to the Q&A in a minute. Just one last question: where, for all three of you, where is the distribution chain of motor insurance going, and what is the biggest challenge that it faces? Guillaume, I'll come to you first.
So I think in the midterm, OEM are going to take more and more space on the insurance distribution. I think there is still a lot of possibilities. Will it be from a risk carrying perspective? Will it be from a technological perspective? Will it be from a distribution perspective? Question mark. But what is for sure is that there will be more and more OEMs running a strong and performing motor affinity program across Europe.
Pierre?
I echo the words of Guillaume. Probably two things. The first one is motor is a mandatory product in most countries. There are some exceptions, but mostly it's a mandatory requirement. And so the car is getting insured a bit anyway. So I'm bullish on embedded insurance, but again, it's a bit an arms race. Agents are very strong in some countries. Agents are getting digitalized as well, and so how much will shift to embedded insurance also will depend on how other channels will behave. And the other thing related to this is a lot of what was a personal lines will become commercial lines. So then it will be a fleet policy in the future, and probably you have some customers that were before Toyota affinity customers that goes to Kinto, for instance, to take the Toyota example. And that's the second thing, that as an insurer for us, we are able to be present in an embedded program at several places. We can work with the car maker, we can work with the financial captive, the Santander, Crédit Agricole of this world. We can also work directly with dealerships. So there are many plays that we have, and we also need to be cautious of not cannibalizing our own offers, because if we do different prices to different people that at the end, are always comparing a Generali offer, it's another issue that we need to deal with in the future.
Okay. And Phil?
So there's a period of transition. The dealer has been our human API for a long time. They've connected our systems, our offerings, but the regulations are going in one direction. We see that in the UK first, but we see it in other markets afterwards. So their opportunity to sell the not mandatory products will reduce because the opportunity to add commission will reduce. That means that we need to put these products in front of the customers in a different way, and that means digital. So whilst the role of the dealer is there for a long period of time, we have an opportunity to embrace that digital channel and have that direct relationship with the customer. In parallel to that, the move from ownership to usership means that you have to have that relationship anyway, and people will be using a service which is a funded, insured asset, as opposed to buying a car, financing a car, and insuring a car, and that requires that partnership.
Thank you very much. Right. If we can go to, we've got time for a couple of questions. If you've got a question, put your hand up, and I'm sure one of the panelists will be very happy to answer. Anyone? No? Yes. Sorry. Just wait for the mic. We'll get to you soon.
Hi there. Ash from Integral. You guys touched briefly on crash data before. What would you say that would be needed to do within the OEM sector or aftermarket to provide better or more unified crash data?
I can pick this one if you want. So, like in some countries, like in Italy, to be valid in court, the claims data need to be formatted in a certain way, and so that's probably the easiest way, to push something in the market. But afterwards, you have many use cases for telematics. This one being one of the most advanced, but you can also just use it for underwriting purposes. Try before you buy and everything. But if you want really to push on claims, at one point you need, I think, the regulator to at least come out with a certain format of how the data needs to be formatted. I think it's 300 hertz, I think, for claims in Italy. So this could serve as a benchmark.
Cool. Oh, you've got a follow-up.
That you touched on a very good point there, because I was actually going to ask, are you aware, or anyone on the panel, if there is a sort of EU act in the pipeline to unify crash data, a bit like the CAN bus scenario a few years back?
I'm not aware. I mean, taking the Italian use case, they had the weakest necks in Europe, followed by the UK, because the regulation allowed that. So equal regulation would help. The other challenge we have, and we have this on theft as well, is around the consent side of things. It's all well and good keeping data private, but sometimes it's not in the customer's interest to share that information to meet their needs.
Thank you.
Thank you. Yep, got a gentleman about halfway down the room.
Yeah, hi.
Oh, no, we've got another one here.
Sorry. Okay. Morgan, so Stellantis Financial Services. Just a question regarding you're saying that the OEM will probably take over the business and the insurer will be also part of it. But how do you foresee the role of the distributor and also the salesman, which sometimes are the dealership in most of the cases? And how do you reshape their trust to go from an insurer where there was, I don't know, partnership, and now OEM insuring, being the OEM behind it, basically?
So just to be clear, I don't think the OEM will take over. I think the OEM has a strong role within this, and the role is not commission first. The role is around long-term strategic alignment to deliver the right services to the customer throughout the whole ownership, and that requires working together. The role of the dealer is a bigger question than we're out of time.
But when it comes to insurance, I mean, personally, I believe that dealerships are going to stay still very pivotal when it comes to introducing insurance program to end customers. It's all about finding the right technology to make the life of dealership much more easy when it comes to introducing insurance. And we were talking about claims and crash data. For me, there is also something which is very important in making this data available for the dealership, because they are the one managing the day-to-day relationship with the end customer. So if whenever there is a crash, you are able to identify from which dealership this car is coming from, and you let the guy at the dealership give a phone call to the customer to arrange, the repair of the vehicle, it becomes also extremely powerful for the dealership in the way of nurturing and building the relationship with end customers.
And probably just before closing, but on this one, I think a lot will depend on the car maker, because if Stellantis wants to transform its dealerships into agents, and now a lot have reverted back from the strategy, this will change how the dealerships will sell or not insurance or competing offers from other providers.
Okay, thank you very much. I hope that answered your question.
Yeah, thank you.
That is all we've got time for. I do apologise, we are out of time, and we've got another panel to come in a couple of minutes. So just let me thank all three of our panellists, and thank you everyone for listening and being here, and I hope you enjoy the rest of the day.